What an interesting day for SoFi stock out there. If you're a longtime shareholder, this is not a new thing for you for SoFi to have a weird day whenever they report their earnings. If you didn't know, SoFi reported their Q1 2025 earnings before the market opened today. And we're going to get into all the numbers in detail, but I'll just say the headline numbers that everyone saw right when they released the report, the one that comes through the Bloomberg terminal, they beat on earnings, they raised their guidance, they beat on revenue. It was a record quarter and a very strong quarter, especially when you look at just the headline numbers. But when you take a deeper look at the earnings report, there's actually some things inside there that were a little bit concerning and a little bit disappointing for SoFi. That's why we saw such a massive pop this morning. The stock was as high as $14.50. And that was a very respectable pop from the prior close of $13.20. But then throughout the day, as people took time to digest this earnings report, the stock continued to fall and fall and fall. And believe it or not, in the aftermarkets today, the stock is actually lower than the prior close. We're at $13.15 in the after hours right now, as compared to a prior close of $13.20. So this record earnings report with SoFi ended up with SoFi stock being lower than it was. That can be really confusing until you look a little deeper into the financials and you find those couple things that are pretty concerning, and they're the reason for sure that SoFi stock is actually down after the earnings rather than it being up like they were right when the earnings report got released. We're going to get into all that in this video, but first, if you're new here, I'm Austin. I'm a co-owner of cloudmusicsuite.com. I'm also a stock market investor, and most importantly for this video, I'm a SoFi shareholder. I've been holding the stock for many years now. It's actually my second largest holding in my entire portfolio. All right, let's get into the video. So first thing this morning in the Patreon community chat, I highlighted some of the good things and some of the bad things that were inside this earnings report. And I said, if we see any type of price weakness, it's definitely because of these two things that weren't so great in the earnings report. So we're definitely going to talk about those two things, but I want to talk about the positive things that happened in the quarter first. This was absolutely a record quarter for SoFi in so many areas. And when you look at the business as a whole, rather than diving into the three different business segments, you'll see that SoFi is in the strongest position they have ever been in as a company right now, which is obviously a great feeling as a shareholder. I've been able to say that for so many quarters in a row. At least 10 quarters in a row, I've been able to say those words. SoFi is the strongest they've ever been. For more than 2.5 years, I've been able to say this. This is such a special company that puts themselves in a position of power every single step of the way. Every single quarter over the last many quarters is the best quarter they've ever had, and this one is no exception. So let's jump into these very strong headline numbers. Adjusted net revenue was up 33% year over year to a record $771 million. Adjusted EBITDA was up 46% to a record $210 million. Fee-based revenue. I was just talking about this fee-based revenue on my most recent SoFi video, and this can be one of the things that changes SoFi for good, forever. And the thing that's going to change specifically is the profitability around SoFi. If they can get this fee-based revenue to continue exploding like it is, it was up 67% in the quarter, all the way up to $315 million. The more they can focus on this fee-based revenue, capital light, fee-based revenue that brings in no extra balance sheet risk, the profitability is going to explode with this company. So I'm very glad that they're focusing their efforts on that fee-based revenue and definitely being rewarded with it being up 67% year over year. Member growth in the quarter was up 34%, all the way to 10.9 million members. Product growth was up 35%, outstripping member growth, which is good, up to a record 15.9 million, and then management raised 2025 guidance. We definitely expected SoFi to not only beat numbers, but also raise guidance, and we got both of those things. Let's talk specifically about what they said about guidance. For full year 25, they increased their adjusted net revenue guidance, which now implies a 24 to 27% annual growth versus a 23 to 26 in the prior guidance. They now expect adjusted EBITDA of $875 to $895 million, which represents an incremental EBITDA margin of 27%, and then a big guidance raise as it relates to net income. They now expect GAAP net income of $320 to $330 million, above the prior guidance of $285 to $305 million. So their low end now is way past their prior high end of guidance. Really strong beat there. And they expect that that's going to equate to GAAP EPS of 27 to 28 cents a share, up from the prior guidance of 25 to 27 cents a share. And one other thing that wasn't in the headline numbers, but definitely should have been because it was extremely strong, the expectation was for 3 cents of EPS in Q1 of 2025. I said in my most recent video, don't be surprised if you see a 6 cent, 7 cent, or 8 cent EPS from SoFi in Q1. We got 6 cents of EPS on a GAAP basis in Q1 of 2025. That's a 100% beat. They doubled up what was expected of them from analysts. And that 6 cent EPS number proved that SoFi's prior guidance of 3 cents a share for Q1 of 2025, that was definitely a sandbag number. They were definitely bringing that down so they could come in and beat that. And of course, once again, they absolutely crushed EPS numbers. They've done this for so many quarters in a row. Check it out here on screen now. That GAAP EPS of 6 cents in Q1 of 2025 was a 200% increase year over year, which is a 3x. They 3x'd their GAAP EPS in a 1-year span. Very impressive. You don't see that kind of growth with a lot of companies out there. And we're going to continue to see strong EPS growth throughout the entirety of 2025 and beyond. Okay, now that we're through those headline numbers, I want to get into the details of the 3 different business segments. If you're a newer SoFi investor or you don't know too much about the company, the 3 different business segments are financial services, tech platform, and then lending. So those are their 3 arms that they've got. This quarter was a little bit of a mixed bag when we look at these individual business segments. Some of the business segments were insanely strong, record-breaking quarters for that segment. Some were pretty dang weak, and then some were okay. Revenue was good, but earnings were bad or something like that from the business segment. So we're going to dive into it, and first I want to look at the financial services segment. This segment in Q1 was absolutely ridiculous. It was on fire. For the first quarter of 2025, financial services segment net revenue of $303.1 million, more than doubled from 1 year ago. Net interest income was up 45% year over year, and non-interest income more than 4x year over year, all the way up to $129.9 million. And this is exactly what I thought was going to happen. Just a few quarters ago, SoFi started up the loan platform business. And this is where they can collect that fee-based revenue that is non-interest related and does not add any risk to the balance sheet whatsoever at all. In the first quarter, SoFi's loan platform business added $96.1 million to our consolidated adjusted net revenue. Of this, $92.8 million was driven by $1.6 billion of personal loans originated on behalf of third parties, as well as referrals to third parties. And then they say additionally, the loan platform business generated $3.3 million in servicing cash flow, which is actually recorded inside of the lending segment, not inside of the financial services segment. So we'll check that out later. And outside of the loan platform business, they have other fee-based revenue that's up very nicely in the quarter. Up 90% year over year was the interchange fee revenue across the money product and the credit card product. Check this out, guys. Total net revenue for financial services was up 101% year over year, while directly attributable expenses was only up 40%. If you ever see revenue up 100%, and expenses for that segment only up 40%, profit is going to absolutely explode. And that's exactly what we saw happen. Contribution profit from the financial services segment was up from $37 million in Q1 of 2024 all the way to $148 million in this quarter right here, which means the contribution margin almost doubled. In Q1 of 2024, they had a 25% contribution margin. In Q1 of 2025, they hit a 49% contribution margin. I have never seen this crazy of a swing in just a 1-year span. That contribution profit on an absolute basis was up 299%. That's a 4x in contribution profit gain over a 1-year span. The loan platform business is the real deal, and it's absolutely going to get SoFi to those EPS numbers that we want. This is the innovation that SoFi needed. This was the lever they needed to pull in order to really get the respect from the market. There's a couple things inside the report that soured the quarter in investors' eyes. That's why the stock's not up massively. But without those things, it would be hard to keep a lid on this stock. In just a few quarters' time, SoFi will never ever be seen again, as this company is just barely profitable. They're barely able to turn a profit. Their margins aren't great. That story is about to change, and it's changing very quickly. Like I said earlier, we went from a 25% contribution margin in financial services to almost a 50% in just 4 quarters. Imagine what's going to happen over the next 4 quarters as they continue to expand this loan platform business. This is huge for SoFi, and as a long-term SoFi shareholder, I couldn't be more happy with how the financial services segment results were in Q1 of 2025. Okay, now let's get into the tech platform. This is one of the major sore spots for the quarter for SoFi. There's a couple reasons. One, revenue was only up 10% year over year for the tech platform. That's not an impressive number. It's okay, it's fine. They still had record revenue for the quarter when you take all three business segments together, but we really don't want to see one of their segments only growing at 10%. And if you did only see it growing at 10%, you would like to see the expenses coming down and them becoming more profitable in that segment, not less. But unfortunately, they actually became less profitable in the tech platform from Q1 of 24 to Q1 of 25. Check it out. Directly attributable expenses went up by 14%, while revenue was only up 10%. That is not good news. That means the margins are going to take a hit. Q1 of 2024, there was a 33% margin for the tech platform. Now, Q1 of 2025, only a 30% margin for the tech platform. That is not what we like to see. If they're going to have slow growth in the tech platform, they need to work on bringing those expenses down for the tech platform so that we can at least see margins continuing to improve, even though they might be experiencing a little bit slower growth in the tech platform for a few quarters. But what we definitely can't see is slow growth on revenue and expenses rising faster than revenue, which means we're going to become less profitable. On an absolute basis, technically, they're slightly more profitable. There's 1% more contribution profit than there was in Q1 of 2024. But like we said, that margin is what we care about. We're down 3% in the margin in 1 year. That's not a good look for the tech platform. And then year over year, connected accounts on the tech platform were up 5% from 151 to 158 million. But they're down 10 million connected accounts sequentially. So from Q4 of 2024 to Q1 of 2025, they lost 10 million accounts. I mean, they must have lost a major customer, a major client in order to lose that many connected accounts. Tech platform results are disappointing once again. They really need to work on turning this tech platform around so that it's not a consistent sore spot every single time there's earnings. We keep having record earnings that are soured just a little bit by the tech platform margins or the tech platform growth, or both, like this quarter. Overall, this was a bad quarter for the tech platform. Let's just call it what it is. And then the third and final segment was the lending segment. The lending segment is a little bit of a mixed bag. There's some great stuff in here. There's some not so great stuff in here. So let's get into the great stuff first. Total net revenue for lending was up 25% year over year, which is a very solid number. Inside of that, net interest income was up 35% year over year, but non-interest income was down 17% year over year. I'm not too worried about that 17% decrease because that's probably just a reflection of a little bit of like cannibalization of the non-interest revenue on the lending side because of the crazy growth they've had in the loan platform business. They would much rather get that non-interest income in the loan platform business than they would in the lending segment, okay? Because it's going to be much higher margin for them, and I'm sure they're not worried about this 17% drop in non-interest income on the lending side, all right? So not a big worry, but something that is worrisome on the lending side is that directly attributable expenses in the lending segment were up 47% year over year, while revenue was only up 25% year over year, which means the contribution margin is going to go down. We lost 5 percentage points in the contribution margin from the lending segment. Q1 of 24 was 63%. Q1 of 25 all the way down to 58%. On an absolute basis, that's still up 15% year over year, so it's not the end of the world, but seeing margins come down in the lending segment is bad news. This is where they bring in the majority of their profit for now. Eventually, not that long from now, it'll be the financial services segment that's bringing in most of the profit, and it'll be fine, and this won't be as big of a deal. But right now, this is where they bring in most of their profit, $238 million worth. So to have your most profitable segment margin decreasing, that is not good. That's not going to put a good taste in Wall Street's mouth when they're deciding whether or not to buy your stock or sell your stock, okay? That's why we saw such a weird day today with the stock popping as high as $14.50, and now it's dropped all the way below its previous close because the market had time to digest this and the bad quarter on the tech platform side. So how do I feel about this quarter overall, and what does it change about my conviction with SoFi? So I feel very good about the quarter overall. The financial services segment had the best quarter ever by a mile and a half, and it was honestly way better than I thought it was going to be. I thought it might take a little while for that loan platform business to see the benefit of all the deals they signed in Q1. It seems like they started seeing that benefit right away, and that fee-based revenue increasing like crazy is definitely going to bring them to new heights as it relates to profitability. We talked about guidance earlier. I still think they're sandbagging their EPS and their net income guidance. Based on what I just saw for the loan platform business, I think they're being extremely conservative with their EPS numbers for full year 25. If we see growth anything close to what we just saw in the financial services segment, even if the other two segments just stay flat, that EPS is about to explode. I think we'll be pretty decently past 30 cents a share of EPS when we look at the end of 2025. Full year 2025, more than 30 cents of EPS. This management team's ability to shift when they need to shift away from tech platform focus, away from lending focus, and over to financial services segment focus is huge. And once they get all these new members on the platform, rates come down, they can push these new members into loans very easily. If anything, I'm leaving this quarter more bullish. Seeing that loan platform business work out way better than I thought it would, way faster than I thought it would, is extremely bullish for me, because I know what it's going to do to the EPS over time. It's going to allow their EPS to explode to the upside. Even though we had a bad quarter for the tech platform, even though expenses for lending were up like crazy, which crushed the margins for the lending segment, the margin was down 5% year over year for the lending segment, margin was down 3% for the tech platform. Even with all of that, because of the strength of the financial services segment, they still had a record quarter. They still had their best quarter ever, and they're in the strongest position they've ever been in. That is ridiculous. And it just goes to show you the management team's ability to shift focus when they need to shift focus in order to put SoFi in the best position possible, which is a great thing to be able to sleep well at night as a shareholder, knowing that this management team has the best interest of the company and the shareholders in their mind. I did not buy any new shares today, and I definitely did not sell any shares today. I'm very happy with my allocation. If the stock drops in any major way, like 2 weeks ago, I was picking up shares again. If it drops again, I'll be picking up shares again. I'll be buying light because it's already a massive overweight position for me, to be honest. It's my number 2 holding in my entire portfolio. I'm happy with my allocation. So I did not make any specific moves with SoFi today, but I did think this was a very strong quarter, especially for the financial services segment. Let me know what you think about this quarter for SoFi and whether or not you think those EPS guidance numbers are still too low based on what we're seeing from the loan platform business. One of my favorite parts of posting here on YouTube is having some conversation with you guys in the comments section. So go down there, let me know what you think. Let's chat about it. I appreciate you being here in a major way. Thank you so much. Have a great night.